And what's up, pups? How's everybody doing? It is lesson time. Yeah, that's right. We got a lot to learn. I know that we could dump and we could pump. But either way, we got to know a little bit more about how PulseChain works. And I thought it'd be pretty cool if we just watch this together, because I was going to watch this video series made by this gentleman called CryptoSloth. This guy, he put a whole series together. A lot of people probably don't know about it, on liquidity. And it's a good time to learn a little bit right now, because things could get really crazy and you might want to know. So let's be ready. Let's watch it together. Let's see if you guys have any questions. We can answer them together. I'll try to get through at least a couple episodes here, and we'll do some more. But he put in a lot of work. It looks pretty cool. I thought we'd watch it. Watch it live. So what are you guys up to? Data Dev, what's going on? Josh T, the Beached Whale. Ink Maxie's here. Hexpedition. All right, everybody, grab a drink. It's going to be a little bit of lesson time here. A lot to learn. Also, I wanted to get back in the habit of streaming again, because we might be looking at charts quite often. So that way, if anything happens, we're ready. We can see what's going on. What's up, Tam Tam? How you doing? Good to see you. What's up, Music Addict? So, let's see. Was there anything? We can look really quick while you guys are getting settled in there before I start the show here. At see what's going on in X really quick. I think Richard Hart was tweeting again. See what he had to say. He was posting quite a bit actually here. He says earlier he posted about Ethereum, looks like. Yo, Biff Finesse, what's happening? Abdullah, what's going on, brother? How are you? Yeah, that's right, everybody. Smash the like button. Smash the like button. What's up, Ruskino? What's up, Chastown? How you doing? He says, I want the Ethereum price to go up more than you do, so here's some free branding and design advice. No one can spell Ethereum. You don't have the .com. Your main call to action is broken. Clicking join us takes you, oops, something went wrong. Your whole landing page is a big stupid picture of purple people, 2 cats, 1 dog, shilling stables instead of native first thing. Would you prefer they buy stables than ETH? A new way to use the internet. Sucks as a headline, and no, that's not what ETH even does. Anyway, that's some free advice. Everyone's a critic, and those with balls would probably submit a pull request, which I did actually click and brought me to a sign in the GitHub. Nope. Anyway, you're welcome for the free advice. Number go up, please. Okay, thanks. Bye. All right. So he's ribbed on Ethereum. All right. He is not happy with them not marketing. Now, there's a reason for them doing that. Because you guys know why, right? Do I believe pdai will peg in the next 72 hours? No. You guys aren't serious, all right? You guys are hilarious. But you know what? Anything's possible. And maybe it does. Great. That would be amazing, right? PulseChain would be at 1,000x from here, probably like instantaneously. It would be amazing. It'd be amazing. So I'm not going to say no. So what do you guys think about this? Because this is interesting. This got me thinking a little bit. You know. By the way, smash that like button, pups. You guys are on YouTube. It's pretty easy. Just reach up there and smash it. Today's show is going to be a little bit educational. We are going to keep an eye on the charts, but of course, I just want to learn about LP from some very smart people on chain, and hopefully some of you guys want to learn as well. A lot of people do a lot of hard work over here in PulseChain, so let's go ahead and watch some of this stuff. But I think, see, big money doesn't broadcast big money. All right, they don't. If you guys have ever been around money, that's why there's even fashion now what they call an old money. And what is it? It's literally like collared shirts and pants and shit. And the reason is because people who really have money, they don't run around in Gucci and Prada and all that. And in the same way, a foundation that's extraordinarily powerful doesn't cloak itself in the cape of looking very powerful. Okay? That's just not how the world works. And I've been around some extraordinarily wealthy people. And you would not know they were extraordinarily wealthy if they were standing next to me. You wouldn't know. Okay. And in the same way, I think the branding for Ethereum is very smart because they are very powerful and very big. And when you're this powerful and this big, the game is, and this isn't just Machiavellian, this is just real game theory. You don't actually want to show that you're that big and powerful. So sometimes a little cartoon picture with cats and all that, it does make sense to me in the sense that, BlackRock doesn't want you to think they're BlackRock and they own everything. Everything's cloaked in this whole, we want to save the world kind of thing, and we love animals and people and all that kind of thing. So I think there might be a bit more, there might be a little bit of a reason behind this, right? Page is a countdown until a 10-year anniversary. It's July 30th, which is around the same time as FOMC. I think pdai should be pegging around the same time too. Does it? Does it have a countdown? Yeah, maybe something is going to happen. I don't personally know Dr. Sloth. We are going to watch his video series, though, he did on LPing. If he does stop by, you know what, I'll put the link in the thing if he is around. He can come on. But really, he's done all the work and put it on there, so we're going to talk about it as we watch it. But let me put the link in. Because... hello. All right. So in the Telegram, which is at the very top of the screen, you guys go there. You guys can click on it and join if you want before I start. Bitfinesse. We all know Vitalik has some ETH. I'm sure Vitalik doesn't want to help PulseChain, and then knows RH has a lot of ETH. Vitalik may suppress price to hurt us. Last man standing. I don't think they're suppressing it just to hurt PulseChain or anything like that. I really don't think so. I think it was suppressed for a reason. I talked to somebody, he's a massive trader in 2022. He was also partly my mentor. He said they were going to suppress ETH and altcoins this cycle for a very long time. So I think it was in the plans, and people that are high up or people that have been around for a long time understood the game that was going to be played here. They're going to squeeze out a lot of the garbage out of the industry. Oh, cool. You did. Okay, you watched the series. Okay, that's pretty much what we're going to watch. Let's see what else Hartman says. Then he tweeted, or he didn't tweet. What do we call it now when somebody posts on X? What's the word? But he's posted, Bitcoin was 1 cent, now it's $100,000. Ethereum was 31 cents, now it's 2,500. If you're reading this, there's a good chance that a coin you like is as good or better than they are. So why wouldn't it be wildly valuable too? The software is better. So what's wrong with this thing? Software is better. And than it's ever been. It just needs eyes. That's right. They posted some charts about Bitcoin over here. Cool. Yeah, it's a long tweet about the Bitcoin org. Then he says, okay, Bitcoin.com, free advice time, bold, compelling headline, nice, but when you click the button, it doesn't work. So, lots of people run ad blocker, so who knows how much traffic you're losing there right at the very start. Interesting. I don't know why he's worried about this stuff. But Ethereum community call on July 24th. RH should probably be joined and voice his concerns. That tweet about software is bullish. There's a tweet and eat zeet. He zeeted. He zeeted. I don't know how you say it. Zeeted. Okay, PulseChain.com. Some advice. Why is there a big ass blank space before the pricing? Nowhere on this site does it even say that PulseChain is what PulseChain is. Starting with price and buy probably ain't bad, but you should tell them what Pulse is or why it's great. My guess People love unique benefit statements. Might want a pluralized developer. Mentioning 35x cheaper than Ethereum is an okay point, but you're bleeding awareness to another coin for no particular reason. No new user cares about how cheap PLS is compared to the other coin. They care about how cheap it is, period. And I'd probably try and hide the comparisons to other coins in an area new people don't see. But if somebody wants to drill down for comparison, they can find them. Crypto has an absolute ton of benefits and features. Seems like the homepage of Layer 1 is a great place to list them. It's like an anti-scam page, too, to keep people safe. So many foot guns and straight-up scams out there, like phishing and fake websites. All right. Okay, that's an interesting take. This thread exists for you to make useful suggestions. Emphasis on useful. What does would the best L1 website in the world look like? Okay, that's a great question. Actually, if you guys don't mind, before we start the show and get into this liquidity, I wouldn't mind checking to see what people did respond to this. I've said it before, probability of the highest community votes. PulseChain Treasury, really big when you open the website. For that support and benefit. I don't think people know. I don't know if people really know about all this stuff and care or understand the effect of any of this stuff. I think people just want to know what it is and what it's going to do for them. You need to speak in the selfish for the other person perspective, which is you could make a lot of money if you buy this. But that's a tough one to just put on there, right? So how would you frame that? With spin and PulseChain, exactly what I was saying. This is, what is it going to do for them? It's going to pump that much. That's marketing right there. So nice work, Somi. That's exactly what you would do. You would go, what does the other person want? They want to make money, and it can pump. That's all that matters. Really, that's really all that matters. There should probably be a section highlighting the benefits of PulseChain over traditional banking. It doesn't even have to be a big section. A bullet point. Yeah, I think a bullet point for that would be fine. But what matters is just sharing basically the upside potential here. You know, you could frame it like, if you do want to talk about Ethereum did this many X's. This is even cheaper and faster. How many X's could this do? You know, just straight up getting right to it. That's it. A tweet about Z. Bitfinesse could see. And Balta, what's happening, man? It should have a tab. Brizology says, or Corey says, a list of projects that have successfully built on PulseChain. Nobody cares about that, but yeah, I mean that could be nice somewhere. I mean, look, I think Nuclear Herbs and like pretty much Somi nailed it. Really, that's all people want to know. What's it going to do for me? That's it. That's really the foundation of marketing. Royson, the cores are. For me, are self-burning DEX, fully decentralized, non-VC controlled chain. Yeah, that's busy, man. That's busy stuff, busy stuff. Panos, the big bridge button directs you to the Gibbs Finance bridge. It should direct you to the official PulseChain bridge. You have to scroll down further to find. Oh, fair enough. Yeah, that could probably be, needs to be some tweaking there. Backwards hat. Dad, clean, concise, easy to navigate. The most important info you want, a potential consumer to see would be visible without much scrolling. Some page animations, vibrant colors to catch attention. Video clips of RH auto playing somewhere on the page. No, I wouldn't put anything about RH on there right now. I would do that maybe later once there's very, very strong green candles across all his products. I would not put any attention toward him right now. As also wanted by Interpol. And about PulseChain tab would be the first place to learn more. Yeah, sure, a tab just with, and then as Nuclear Herbs mentioned, some bullet points in there, directing people there. One link to bridge and buy the official. Yep, that's simple, clean, just one link. Link tree to RH. No. Independently financed developers built on PulseChain. Be the next Poly Market, OpenSea, Aave. Your project shouldn't die because it gets $200 again. All this is complicated. Everything this guy says is a smart guy, but this is all makes sense. I understand what this is because I'm in crypto, but other than that, it's going to go right over people's heads. The big bridge button, which brings you to Gibbs Finance. It's cool, man. We got really smart people, and for marketing, that's not good. You don't want the smart people doing the marketing. I think Somi nailed it, and this is exactly my sentiment. All it needs to say is PulseChain was designed to pump that much. That's it. If you put, this is a way that you can be very successful in crypto. That's kind of all you want to get to. People in the freedom movement value the decentralized side, but don't understand the tech. The older ones, anyway. Boomers. Yeah, it should just be a value proposition, man. What's it going to do for me? Nobody cares about that. That can be a bullet point later that it's green and fast. It's not going to be green if he's mailing out 100 billion batteries to people on postcards. Hang on, let me shut this door. No, it's like you need to be smart, but you also need to understand people and kind of like understand simplicity and all that. Yeah, man. It's like if you're, if you're branding on Instagram or TikTok, it's people want to know like what's this going to do for my life? That's it. That's what you got to answer for people, and that should be the top of your marketing. Coin that went up. That was one of the things that made Steve Jobs great. He understood that, Microsoft, all these other companies kept advertising the tech, and the devs were happy with that. Steve Jobs understood that people don't give a fucking shit about the tech or the decentralized or whatever you want to plug in there. He understood that he could take a product, make it small, and just show you how it goes in your pocket and it has this many songs on it. That's what it did for people. People are like, wow, I can hold that many songs in my pocket. That's it. And really you need to just have that as a main thing. Oh, it's going to go up this much. Oh, cool. I'm going to get rich. And then later on you might have, as people get curious, more details about it. Like, oh, and it's green and it's fast. And, we have amazing developers and it's very safe, blah, blah, blah. But that comes later. That comes much later. Just like the iPod. I remember being a kid and seeing that, and Steve Jobs, all he did was walk out and he said, it holds this many songs, and then he put it in his pocket, and everybody went, I want one. That was it. We didn't know the tech. We didn't know how many gigabytes and megabytes and what, all the audio people were complaining. We didn't care. We just knew we had this many songs in our pocket. We didn't know if it was MP3 or GFC or VHS. We don't care. Most people are like, cool, I can put 1,000 songs in my pocket. I'm happy, and it's only $200 or whatever it was, right? CryptoSloth is a dentist. PulseChain is lawyers, dentists, real estate. Yeah, we got a lot of smart people. And the smart people want to talk about, just like at the time of Steve Jobs when he was fighting with all the people, and they wanted to talk about the tech and then this and that. And Steve's like, look, man, people don't care. They just want to know what it's going to do for them. And that's why he made the small computers. He made them more colorful, more interesting looking. And people like that, right? They like the design. A PulseChain logo subtly animated with a heartbeat. Homepage. Instant clarity. What Pulse is, why ape in, and how not to get rugged. Sure. Simple. Clean. I like that. But pretty much number go up. That is what should be at the thing. Like, this is going to fly. What? You guys are all dentists and scientists. Cool. Let's get into it. Let's just get into it. All right. We're going to watch this. This is CryptoSloth. He did a whole series on liquidity. I think that as we're getting into the bull run, which is coming, even if we have a dippy poo, which I think is going to happen because the dollar is oversold big time. And things look a little toppy right now, so we might get a little bit of a pullback here. But there is a big thunderous move coming, and I am hoping and betting it's to the upside. So let's learn a little bit about this, because maybe some of you guys might want to do this, because it could be quite profitable for you to make easy money with your big bags you've been holding for a long time. So there's a guy named CryptoSloth. You guys should check him out. I'm sure everybody knows who this is, but his channel is CryptoSloth. And he has a whole series. The link is in this video's description. He has this whole, I think it's a 10, 11, what is it, 15? It's 10 video series on liquidity providing, okay? We're going to try to watch 2 or 3 of the videos, and then maybe I'll do another video this week, and we'll watch the rest of it, because I do want to watch this. And it's pretty cool. Look, 7,500 people have already watched it. He's put it up a year ago. He put a lot of work into it. So let's check it out.
Everybody, how's it going? CryptoSloth here, and this is the start of a series that I'm doing on liquidity providing. You know, as many of you guys know, I've done a lot of content on liquidity providing before, both on streams as well as courses and like within my private Telegram and everything. But I wanted to create a resource for everybody where they can go back to it to learn about all of the different aspects of liquidity providing. And the goal of this series is to kind of take you from about 0 to 80. You know, I'm not going to go into the super advanced stuff, but this is going to lay the foundation for anybody who's looking to utilize liquidity providing in their crypto strategies to produce passive income, to buy crypto, to sell crypto, whatever it might be, or simply just use it as a tool to understanding why the market is moving a certain way, or an extra tool to help you analyze the market. That's what this video series is. It's about a 9-part video series where I'm going to release one video every single day, starting with today. And they're going to be nice bite-sized chunks that don't take too long to listen to. And my hope is that you share these out and refer back to them over time. You know, with PulseChain being a couple months old now, and us getting a lot of different dApps, specifically a lot of different DEXs available to us, and DEX aggregators, is really important for both the casual user and the power user to understand the different forms of liquidity, how to utilize them, why they're important, and kind of like what these different types of liquidities mean for price action. And so this first video is basically the basics. So yeah, liquidity providing lesson number 1, the basics. And the goal of today's lesson is to set the absolute foundational groundwork. The concept that I'm going to share with you guys today in this video is, in a lot of ways, all you really need to know about liquidity providing. Everything else is derived from the one concept that I'm going to be outlining to you in this first lesson, the basics. So let's just dive into it, shall we? So liquidity providing is allowing others to trade with your coins. That is it. That is what you're doing when you're providing liquidity. You're putting your coins up into the market and signaling to everybody, hey, if you want to trade one of these 2 coins, I will allow you to do that with my coins. So how does this work? Well, let's just take a liquidity pool for an example. Let's say the cylinder is a liquidity pool and it's yours. You own this. And in this liquidity pool, we have 3 hex tokens and we have 3 USDC tokens. If this is the only liquidity that exists, then the price of each hex token would be $1, because the price is a function of the ratio of tokens within a liquidity pool. And if this is all the liquidity that exists, then hex is at $1, because each hex is backed by 1 USDC coin. Okay. Now, let's say somebody wants to buy hex. You know, you've put your coins in this liquidity pool, and so somebody who wants to buy hex is going to take their USDC and they're going to place it into this pool. And then when they place it into the pool, they're going to get hex back at the rate at which the price is set at. So in this case, it was $1. So they put $1 in, they get 1 hex token out. Now, if you'll notice, the composition of that liquidity pool has now changed. So instead of before you having 3 hex tokens and 3 USDC tokens, you now have 2 hex tokens and 4 USDC tokens. This change in composition of liquidity pool is going to be very important when we talk about concepts like impermanent loss. But for now, just know that you, as the liquidity provider, have lost a hex coin but gained a USDC coin. And if we recalculate the price based on what this buy has done, we now have 2 hex tokens, 4 USDC tokens. Each hex is backed by 2 USDC. Therefore, each hex is worth $2. Well, let's take the same scenario and say somebody wants to sell their hex. Well, in this case, they're going to take their hex token, they're going to put it in the liquidity pool and pull out 1 USDC token dictated by the hex equals $1, that price tag at this ratio. And now we have 2 USDC tokens backed by 1 hex token, or 1 hex token backed by a half of a USDC token. So in this case, the price of hex is 50 cents.
All right. Any questions so far? Do you guys understand what he's talking about? He made it super simple, and I really love how he just made this illustration and this graphic. This is supply and demand 101. You now have more of the hex and less dollars chasing it. So you have a lower price on the hex. And a minute ago, he showed the opposite, right? There was less hex and there was more dollars available, right? So there was more dollars chasing the hex in a sense, right? And that means the demand is higher and the price reflects that, was significantly higher, right? And in crypto, because liquidity can be low. It can be very volatile. I mean, you can go from a $2 item to a 50-cent item very quickly. So that was very cool. And you guys have any questions, just throw them in there. We'll stop it wherever you guys want if you guys need. But yeah, this is keeping it super easy to understand.
Accumulating hex. So in a given market for the 2 coins that you're trading with. So person buys hex, it goes to $2. Person sells hex, it goes to 50 cents. And then you as the liquidity provider either accumulating hex or accumulating USDC, one of the two, depending on whether people are buying or selling. So that's the only concept that we're getting across today. It's the very foundational concept, and that is liquidity providing is allowing others to trade with your coins. If you understand this intimately, everything else in this video series will make a lot of sense, and everything else in this video series is derived from this one concept. So when a swap occurs, one token is placed in the liquidity pool and another is removed. This changes price because price is a function of the ratio of the coins. The liquidity provider is left with more of the token that has less value. And this makes sense if we go back to our example. Let's take this example where somebody has bought hex. So they took hex, they placed it in they took USDC, placed it in the liquidity pool, and then took out hex tokens. Well, the price of hex went up. It doubled in this specific scenario, but they're left with less tokens that have gone up in value and have retained more tokens that have, in this case, retained their value, or technically gone down in value because the value of USDC has gone down relative to hex. Now, one thing that I didn't mention in those scenarios is that, you're providing a service to the market when you're providing liquidity. This is a service by making the market. You are a market maker. So because of this, you are entitled to a fee. And that fee is paid with every swap. So when somebody does a swap, a small bit of their transaction is of their money that they're buying or selling with is taken out of the transaction and then given to the liquidity providers. And this is where the lucrative part of liquidity providing comes into place. You are, in a sense, trying to make money by providing your coins to the market to trade with, and you are earning the fees associated with those swaps. So a fee is paid with every swap which is given to the liquidity provider. I hope you enjoyed that first lesson. Very, very simple, very, very straightforward. Stay tuned for tomorrow where we're going to get into the difference between Uniswap.
That was amazing, Sloth. That was a great first lesson, and that was super easy, and I love the illustration. So he made this a year ago. Do you guys have any questions? I'm going to go to the next video. Yeah? Once again, this is CryptoSloth. He's on X. His link to his channel, everything is in the description. Let's go to number 2, shall we?
What's up, everybody? Welcome to lesson 2 in my liquidity providing series. Today, we're going to be talking about the difference between V2 and V3 style DEXs. And for those of you that don't know, a DEX is simply a decentralized exchange. So everything I talked about yesterday in my last video, one of the main differences between a centralized and a decentralized exchange is that on a centralized exchange, all of the liquidity that's provided comes from basically a single entity or a very centralized group of entities that not everybody has access to. So for example, you cannot take your coins and go provide liquidity on Coinbase, Kraken, or any of these centralized exchanges. A decentralized exchange is the opposite, in that the liquidity is sourced from the community. So anybody is able to come in, take their tokens, and deposit them into a liquidity pool to start earning fees. And this, in my opinion, is a humongous revolution.
Yeah.
Because anybody has access to the monetary energy or the financial energy of a crypto market without needing to ask permission or without needing to be part of an insiders club.
Yeah, this is a huge point that he's making right here. And I think what a lot of people also don't realize, PulseChain allows the everyday person to do this without massive costs. Like, you can make liquidity pool with $10 or $20, and something like this doing on Ethereum is just difficult because just the cost and barriers to entries are higher, right? Now, you can still do it there. They're not like astronomically higher, but they are higher. Here it gives an opportunity for you to learn in a way and be your own provider, your own bank in some ways, right? So it's one of the really cool things about PulseChain. And that's one of also the reasons I wanted to share this video series with you guys. because I think a lot of people underestimate the importance of this and how much of a big deal this is that we can all participate in these things and learn how this works very easily right now. Okay, so
anybody can access the financial energy of a market and utilize it to start making money or execute swaps at an efficient rate or help support a specific crypto market. So today we're talking about the two most important ones for you to understand. If you understand these two, you are 90 to 95% of the way there to understanding how all liquidity works across every single L1 across the entire crypto market. So this is going to be a very important lesson. Make sure you pay attention, take notes if you want, but you don't need to take notes because all of this is recorded for you to watch anyways. So let's dig into it. It's going to start with Uniswap V2. And Uniswap V2 can be boiled down to this one formula. X times Y equals K. All of the swaps and prices are derived or are calculated by this formula. So I'm going to go through an example of how this formula is used to calculate how much price moves with each buy and sell, as well as how many coins are given out to a buyer or seller when they execute a swap. So we'll take the formula X times Y equals K. And let's use a similar example as before, where we have a hex at $1, but this time we have 100 hex in the pool and 100 USDC in the pool. First, X and Y, these represent the number of tokens in the liquidity pool. And then K is a constant. So no matter what happens to the amount of tokens into the pool, they always will equal K, the constant at the end of the swap. That constant is set by the person who sets the initial liquidity pool. So the person who opens it and creates the LP pool is the person who sets that constant, and it stays the same forever until it closes, which is basically means there is no constant at that point. So in this scenario, we have 100 USDC tokens and 100 hex tokens. You multiply 100 by 100, you get 10,000. Now that's what K is. So every single swap going forward, K will always equal 10,000. Technically, K can go up because in the V2 pool, the fees are put back into the liquidity pool. But that we can talk about that a little bit later. Okay, so let's go with our scenario that somebody wants to buy hex and they're going to put in 10 USDC tokens into this pool. So when they put in the 10 USDC tokens, at the end of that deposit, the pool is going to have 110 tokens left into it. Now, when you have that final amount of tokens of USDC in the pool, we need to then do just a very small algebra problem to calculate how many hex tokens are going to be left. And this is a division problem. So you just take, you divide X times Y by X, divide K by X. In this case, it's 110. And so what we're left with is 91. So there are going to be 91 hex tokens left in the pool after.
All right. Now we're getting deeper in the weeds. You guys have any questions, just let me know. We'll stop. Let's check this out. So, does this make sense to everybody? Interesting. Okay. So it just goes back literally to what he explained in part one. It's just the amount of USDC in the pool has gone up. So the value of the item it's traded against has just come down a little bit. Okay. Let's keep going.
After this swap. And so, if we multiply 110 by 91, we basically get back to 10,000. And if you notice, the price of hex has went from $1 to $1.20, which makes sense because somebody's buying the price. If you're buying up the token, the price is going up. Now, how many tokens are given to the person executing the swap? Well, if we take this 100, we have 100 tokens originally. We have 91 left over after the swap, which means 9 tokens are going to the buyer. Now, one important thing to note is that the price of here was $1. And you would expect if you put $10 in, you should get 10 hex tokens out. Well, this person only got 9. And that's a really important concept to understand. And that's the concept of slippage, which is the difference between what you expect to get based on the quoted price when you start your transaction or your swap and the actual coins that you get. Typically, this is represented. Typically, slippage is understood by the different market orders or the different orders in a market book, in an order book. And then as you fill in those orders, the difference in price is the slippage that you're getting. For a decentralized exchange, it's basically the difference between what you expected to get and what you actually get based on the liquidity that's there. So in this case. case we had a slippage of, I believe, like 10%, which is really, really high. But for the sake of example, it's pretty clear.
Right. And 10% of slippage can be pretty common right now on PulseChain. So let's go back, make sure everybody understands that. Now let's hear. Hang on one second, let me just go right back. Once clip here. All right. Bitfinesse says after adding coins to one side, you figure out the amount of other coins by dividing by the constant. You're just solving for the variable, the amount of coins of the other coin. Okay, but I understand what you're saying, but that even might confuse people. So simply, the way maybe, I hope this, I'm going to try to make it really simple. It's as if, the way I think of it is if you're putting in a buy, and like he's saying, you should be getting 10 tokens, you're putting it in, you almost want to think of it like the system's already rebalancing the pool on you as you're moving. And if your buy is really big, it's doing it on the fly. You're like, if you don't just get 10, you buy 100, the system's already recalculating, what the cost is. You know what I mean? You're driving it up very dramatically, by injecting your order in that way. Sorry, we're dividing the amount of coins of the coin you pay. See, he's already getting confused. Yeah, simply the system's already, seeing your order and it's moving it. All right. Now, that's why a lot of liquidity, a lot of volume is why traders want to be on really massive things, like let's say Bitcoin, right? So they can move in and out of trades without having to, deal with the slippage. As you get smaller and smaller pools, and like he's saying in this situation where there's only 100 and you're doing 10%, which is 10 USD, you're moving 10% of that amount, that total supply in and out. So it's rebalancing. So you're only getting, you like you said, you got a loss of 10% there. It's not really a loss. It's just the value arbitrage shifted on you. It rebalances the pool to keep the constant. Exactly. It's rebalancing on the fly. You know what I mean? So the bigger that liquidity, let's say you're doing $10, but instead of the X being just 100, it's like 1,000,000, you'll probably get 10 out, right? Or like 9.99. It's not going to be a big deal. But if you're literally, there's only 100 and you're going to move 10 and trying to take 10% out, well, it's going to adjust on you. It's going to rebalance, in the process. So that's one way you could do it. Or think about it. It's really pretty simple. But there is math to it, if you want to get really into it.
10%, which is really, really high. But for the sake of example, if we take the formula x times y equals k and we plot it on a graph, this is what we get. And what you'll see is that on the bottom you have x and at the top we have y. Now, this graph right here gets across a very, very, very important concept in V2 liquidity, and that is that your liquidity is spread across all possible prices between the two assets that you've provided liquidity on. And the way this graph shows that is by being asymptotic towards zero, both on the x-axis and the y-axis. And what asymptotic means is that these lines will continuously approach zero on the y-axis and on the x-axis, but it will never actually hit zero. So it'll get infinitely close to zero, but never actually touch it, which is the definition of asymptotic. What that means is when you provide, say, $1,000 of liquidity in a V2 DEX, your liquidity is spread, let's just use Hex for example, from infinitely small, as close to zero as you can get, all the way to infinity. So you're technically providing liquidity at $1,000 per Hex token, $1 million per Hex token when you're providing it in a V2 position. Now let's take that same example that we just outlined back here and let's see what that looks like on the V2 chart, because that could help exemplify or help you understand what's going on when a swap is executed on V2. So it's going to use the same example, Hex and USDC, and let's say the price starts at this P prime right here. So we have price here at P prime, and this is how much Hex is in here, and this is how much USDC is in the pool. This amount right here, and then this amount of Hex. So let's say we put that same $10 of USDC in, and this blue line represents that $10. The price then moves from here all the way from P prime to P. And so if you'll notice, as the price has moved up to the left in this specific graph, all of a sudden, the amount of Hex has changed, and technically it has decreased. So the movement of hex from here to here, this red bar would represent the 9 USDC tokens taken out. So over here was 100, and now it's 91 over here. It's not to scale. This is just overlaying the previous example to this one. And then this red bar right here represents the amount of hex tokens taken out of the pool, which our previous example, it was 9 tokens. Now, if you remember, I said that all of the liquidity is spread infinitely across all prices from 0 to infinity, essentially. And so when we do another swap from here, because the price has gone up and because there isn't that much liquidity at every price, you're actually going to get less tokens for the same magnitude of buy. And we see that represented in this graph right here. So let's do another buy. Let's say P prime, P, and now we're going to go to P double prime right here, for example. And now this blue bar is the same size as the previous bar right here. And if you'll notice, when we go up to this new price, we're actually getting less hex tokens out when we do the same magnitude of buy. And this is what this is representing here. This first buy with this 10 USDC or however much it is getting this much hex out. But the second buy afterwards is only getting this much hex out. And that's what's happening as you're buying up the price in an X times Y equals K DEX or a Uniswap V2 style DEX. And on PulseChain, things like PulseX, 9inch, Spark Swap, 9mm has a V2 DEX. We have a bunch of V2 DEXs currently live, and this is the exact formula that they're using to calculate how many funds are being paid out per swap. And as you continue to buy up the price, the amount of coins that you get outputted will continuously decrease over and over and over and over and over again until the price is so high. And this makes a lot of sense, right? If the price is going up, you are getting less tokens for that same dollar value. And so this graph essentially represents that, I guess, how could you say it? It represents how price action looks graphically. That's what this graph is. Now, V2 liquidity is great in that it provides liquidity at every single price. So there is always coins to be buying and selling at every single price point, which it can be spun as a good thing, and it is a good thing. But what about coins that don't trade and that aren't very volatile relative to each other? What about like stable coins? USDC and USDT never really go outside of 99 cents and $1.01 because they're always arbitrage back to $1 because they're both stable coins backed by fiat and can be redeemed for $1. So is that style of liquidity really efficient? If we have tokens set in liquidity at 1,000 USDC per 1 USDT, are those coins ever going to be traded with? And the answer to that is no. And this is what this is exactly what I said is represented here on this graph. If we put USDC and USDT together, and if P right here is, say, 99 cents, and then P prime is $1.01, all of the trading is going to be happening within this range. And then all of the liquidity that exists outside of this range is never going to be utilized. And this presents somewhat of a problem because we have inefficient liquidity that isn't being used to service the market. And so we need a lot more liquidity available to be able to service a greater market. We're simply not being capital efficient. And that is where Uniswap V3 or V3 liquidity comes into play. With V2, think X times Y equals K, infinite liquidity, infinite spread of liquidity across all prices. With V3, think concentrated liquidity. So this...
All right. Yo, what's up, Body Mechanic? How you doing? How's everybody doing? Everybody caught up? Everybody understand what's going on? What's up, Turk Montana? How you doing? GG, man. Is that guy selling the PX? Yeah, I don't want to buy the dip. He moved 300 million. Apparently he's got a lot, man. I heard he's got even more waiting. What's up, Blobfish? How are you? So, collection of custom positions. V3. That's like the pro thing. What's up, KD? Yo, how you doing? How you doing? All right, let's continue. Have any questions? Throw them in. We'll pause it. We'll deal with it. What's up, Triplet Dad? How are you? Good to see you. Let's keep listening.
Graph, this image right here represents the different types of positions that exist on a V2 and a V3 style DEX. And this is taken directly from the Uniswap white paper. So in a V2 position, like I said, your liquidity is spread equally across prices of 0 to infinity. So you put $1,000, that $1,000 is spread from 0 to infinity completely equally. A single position on V3 has discrete price parameters. So instead of 0 to infinity, you can place your liquidity between $1 and $2, and all 1,000 of your dollars is spread equally across $1 and $2. Now, this is great because instead of there being, say, a couple cents out at $1 million per hex token at USDC, and you just want to trade, you just want to have in liquidity, and price mostly trades between $1 and $2 in this example, well, you can put all of your liquidity together in that really tight range so that the market is better serviced and you're actually earning more fees that way. We'll get into that a little bit later. But in a V3 system, liquidity, there isn't just one position. So this just represents one person's position, but we can have multiple positions. So let's say PA and PB, PA is $1, PB is $2. We'll say somebody has another position of $1,000, but it ranges from $1.50 to $2.50. So we have $1,000 from $1 to $2, and then $1,000 from $1.50 to $2.50. There are two separate positions of $1,000, equally split across a dollar range, but one is shifted 50 cents higher. Well, if you notice that this second position, represented by the red bar, overlaps half of this original blue position. And so what that means is from 50 cents to $1, instead of only having $500 of liquidity, which each position has, they overlap. And now there's $1,000 of liquidity between 50 cents and $1 with this example. And so when you overlap positions on a V3 system, the amount of liquidity at those discrete price ranges increases proportional to the amount of liquidity that is overlapping at that price. And that is what this multiple V3 positions represents right here. It's typically when you look at V3 liquidity histograms, they are normally distributed. And all that means is that there is this nice hill that peaks in the center and then is equidistantly decreasing as price increases, or as you're going away from where the current price is. And what you'll see is that peak where the normal distribution is will move where price is. And there are reasons for that we'll get into a little bit later. And so just understanding that concept, what we can do is understand how we can understand how there's different amounts of liquidity at different price ranges for a V3 liquidity pool. So this is pulled from corkey.eth, amazing website. I'll link it in the description. And this was back when Hex was about 9 cents. So, better days, you could say. But I like this graph specifically because it shows you how within one liquidity pool, you can have very different types of liquidity across different price ranges. And so what we see here is that there's a high amount of liquidity from this price to this price. And what that means is that if there's a high amount of liquidity, there is less slippage and lower volatility. And what I mean by that is if we have $1,000 from $1 to $2, it takes $1,000 to move price from $1 to $2. If you have $10,000 from $1 to $2, it takes $10,000 to move from $1 to $2. So the more liquidity there is, the slower price moves because you need more money to move the price the same distance. The opposite is true for low liquidity. So in this area right here, if there's low liquidity, there's higher slippage because it takes less money to move the price, and there's higher volatility because the velocity of price is moving because it takes less money to move the price. And then here's a nice example of what like a medium amount of liquidity would look like between these two. So we would get a medium amount of slippage and a medium amount of volatility if price were to range within this red bar right here. All right, guys, I hope you liked the second lesson. That was a little bit more jam-packed, a lot of technical data price. But I like this graph specifically because it shows you how within one liquidity pool, you can have very different types of liquidity across different price ranges. And so what we see here is that there's a high amount of liquidity from this price to this price. And what that means is that if there's a high amount of liquidity, there is less slippage and lower volatility. And what I mean by that is if we have $1,000 from $1 to $2, it takes $1,000 to move price from $1 to $2. If you have $10,000 from $1 to $2, it takes $10,000 to move from $1 to $2. So the more liquidity there is, the slower price moves because you need more money to move the price the same distance. The opposite is true for low liquidity. So in this area right here, if there's low liquidity, there's higher slippage because it takes less money to move the price, and there's higher volatility because the velocity of price is moving because it takes less money to move the price. And then here's a nice example of what like a medium amount of liquidity would look like between these two. So we would get a medium amount of slippage and a medium amount of volatility if price were to range within this red bar right here.
All right, you guys understand why that is? Why there are these ranges? I don't think he clarifies it here. But you guys understand why, right? It's actually really important. Bitfinesse, we says Breton will deal with that later. Seller wallet. Oh, PulseChain MP. Yeah, I think it's exactly what you just said, man. This is normal game all over the world in all asset classes. It's done all the time. Bitfinesse. I think assets would have honest prices if Uniswap v3 was never created. It basically allows any user to engage in price manipulation, keeping an asset pegged in a range if you have the coins. Right. So the reason is because these are where you have, bids and offers, pretty much where people are willing to sell and buy. It's like an order book, all right? And based on that, it's pretty much revealing the supply and demand. This is reflecting that, right? So where there's more slippage, there's less available. Obviously, here where there's low slippage, there's probably a lot of for sale or what have you, right? This might be lower prices. Less people are willing to sell. This may be somewhere in the middle. And what Bitfinesse is saying is that bigger players who can just like you see right now, there's 300 coins. Well, that's just moved. That's not in the order book yet or anything like that. But when you have, for example, a sell wall or something like that, right, where people are going to put things in, they want to sell, or buy orders where you can see someone's buy orders, right? He says if you put enough liquidity on both sides in a pair, the price will never move 100%. That's right. And I think that's how, for example, an institution will control the price of gold, for example, which eventually will happen to BTC eventually one day, right? Whatever that price repricing will be. I think they're going to pair it to gold in some way. Okay, they're going to connect gold and BTC eventually. And how they do that is, it's quite sophisticated. You need to be a pretty massive player, but really it's pretty much that simple, where if you have enough liquidity on both sides of the pair, the price will never move if you have enough coins. And that's the truth. Just like when there was maybe there was a sell wall on Hex where there was that big, that bank, whatever, they had that thing, right? So nobody was willing to mess around. The bank X, that's right. What's up, Conspiracy Crypto? How you doing, man? Ash Tree, Ovidian. Is this a PulseX conference? No. I'm just preparing for the move, man. I think it's important we learn a little bit about liquidity, and I had this saved for a while. I've been wanting to check it out myself, so I thought I'd share it with you guys live because I think some of you guys can benefit a lot from learning about this. One, you can actually make your own liquidity pools, and something we talked about earlier in the video, which is that PulseChain allows everyday people, just people like us, to do this because the cost to learn, experiment, make mistakes is very low. It's very inexpensive. You can get in and start participating as if you were a whale, even if your pool is just $10 a side, right? It's all good, and you can start to learn what this game is like. And then two, you can just learn that learning this is going to help you understand the perspective of why prices are moving the way they do, or why at times you have so much slippage or not. So it's not such a mystery thing. You just get it. You're like, okay, it really comes down to supply and demand at certain price ranges. It's very simple, really. And I think CryptoSloth, shout out to him again. He did a great job putting this all together. It's about a year old. It'll always be relevant. He put some great graphics here. I think we got time to watch one more if you guys are cool with that. And I'll try to show the rest of it on some other live streams as well. While we got this time, right? I'm also waiting for prices to move. So,
what's up, everybody? How's it going?
Impermanent loss. Okay, I think this is kind of a big one. Do you guys want to do impermanent loss? I feel like I understand impermanent loss really well, but because I do this. But let me know. I can skip this one. Should I skip this one? Because everyone knows impermanent loss, right? You guys all know impermanent loss. You guys want to watch this one? Let me know. I'll give you guys a sec. I'm down to just jump right ahead to number 4, liquidity providing LP data. But we can do impermanent loss if you guys want to. While you guys are deciding, chat, I'm going to just look ahead where we are. What are the prices doing right now really quick? Play it? You want to do the permanent loss? Okay, let's do it. Yeah, everything's just going sideways. Not much going on yet. I think we're going to have a little bit. I would think the dollar's going to pull back a little. Pump from here. It's very oversold. So we can get that little baby pullback coming here. Oh, PulseChain AP, you don't know any of this? All right, let's do it. Let's play the whole thing. Let's do impermanent loss. Okay.
We are on lesson number 3 of my liquidity providing series, and today we are talking about impermanent loss. Yesterday we talked about the difference between V2 dexes and V3 dexes, and that was to give you a brief overview of like what the difference between the two is. And you'll notice between that video and the previous video, I mentioned something called impermanent loss. And when people start talking about liquidity providing, impermanent loss is typically like the big thing that comes up in like why you should.
Right. Oh, wrong button.
Mention something called impermanent loss. And when people start talking about liquidity providing, impermanent loss is typically like the big thing that comes up in like why you shouldn't do it, or like why you should be scared, or why you should be cautious about it. And those arguments or those perspectives definitely have some value in that impermanent loss is a risk. However, I think sometimes they're overblown. And so today's lesson is to help you understand what impermanent loss is so that you are equipped with the knowledge to provide liquidity while understanding what the risks of doing it are. And the way I like to phrase it is impermanent loss is the risk that you are taking on in order to earn the fees that are being generated when you're providing liquidity. So like providing liquidity is a service, so you get paid for it, but you're also taking on the risk of impermanent loss, which is why you're being compensated for the service that you're giving to the market. And so to start off the lesson, I want to go back to the original example that we started with, or let's just talk about what impermanent loss is first. And then we're going to talk about the original example that I did in video 1. So impermanent loss is the formula is your HODL bag at the post-trade value minus the post-trade value. And this is kind of like a complicated way of saying what we could have had minus what we have. So it's like the difference between what you would have had, the value of your tokens if you just held your tokens after a price move versus what you have after the price happens when you're providing liquidity. So let's go to our original example, and we have a liquidity position with 3 HEX tokens and 3 USDC tokens. HEX is $1. Somebody wants to buy HEX. They put the USDC into the pool, and they get HEX out. So a person has now purchased HEX, and HEX has gone up to $2. Well, if you'll notice in this trade, originally they had 3 HEX tokens, 3 USDC tokens. Now they have less HEX tokens and more USDC tokens, but the price of HEX has increased in value. So let's calculate what the impermanent loss would be for this specific, really, really discrete example. So we have our pre-trade bag, and what the liquidity is, what the liquidity provider, the tokens that they have before the trade happens, and we have the liquidity pool after the trade has happened. So before the trade, HEX is at $1. That's what the ratio is saying, and the liquidity value total is $6 because each HEX is $1, so it's $3 plus $3, $6 total. Afterwards, the liquidity provider has 2 HEX tokens and 4 USDC tokens. So this is 4. Now HEX is now $2. So 4 plus 2 plus 2, 4 plus 4 is 8. So, the value that we would have had if we had held, we would have had our 3 HEX tokens at this post-trade value, which is $2. So 3 HEX tokens at $2, which is $6, plus the 3 USDC tokens. We would have had $9 if we never put these tokens in liquidity and just held them over time. But because we had provided liquidity and we have lost the token that's going up in value, in this specific example, it's HEX, and HEX is now $2. Well, if our final value after the trade is $8, our impermanent loss is 1. Because if we had held, we would have had $9, but because we provided liquidity, we have $8. So the difference between those two is $1, which is your impermanent loss. And when you're providing liquidity, your goal is for the fees to out-earn the impermanent loss. So hopefully through this trade, you earn more than $1 in fees. Now that wouldn't be the case because they put in $1 and the fees are a percentage of the trade that happened. So you would have earned a percent of $1. But keep in mind that a position is not this discrete or not this like closed of a system. It's multiple trades with multiple people over time. So you're earning fees with every single trade. And sometimes the impermanent loss goes up and it goes down. Right, so if somebody did the reverse of this trade and tried to put another HEX token in to receive a USDC token back, it's possible that your liquidity position goes back to net neutral for what you put in. And when that happens, all of your fees are positive, so there is no impermanent loss. Of course, if the price kept going up and people kept taking HEX tokens out, well, then your impermanent loss would continue to increase because you're continuously losing the token that's increasing in value and accumulating the token that's staying the same in value, or really in this case, decreasing in value relative to the other token. And so here are two.
All right, everybody follow that? Everybody understand? He's going to probably show it in some different ways as well. But pretty much, let's say you started out with an equal amount of both. Inevitably, as the market changes, you might end up with an imbalance in what you started with, which could be fine. It all depends on the value of, what those assets are. Maybe you want to hold both, so it's not such a big deal. But for example, if Hex got extraordinarily bullish and the price started racketing up very quickly on your Hex, and you had it paired, 1-to-1 with a stable. So let's say you had 100 Hex and $100 in stable, and then people are buying the Hex is pumping, okay? You might end up with a lot less Hex and a lot of stable coin. So you need to think about that. I don't think of it as a permanent loss. I just think of it as, a change in the pool, and it just depends on where you're at. If you're doing Pulse and Pulse X, and I was doing that for a while, and I think I ended up with, a lot more Pulse. I don't remember correctly, but I was fine with it. Like, I was fine with it either way. I was okay, but there may be other for example, I had one pool I think I did the Pulse ink pool, and I ended up with a lot of ink. And at first I freaked out because I lost a lot of Pulse, but then I realized, I'm like, oh, I think this is good that I ended up. So it really depends, right? It's not necessarily a loss. It's just a change. Now, it could be a loss if we start the bull run and you just end up with a whole handful of stables and you're losing the asset that's going up significantly. So you need to think about it. That's why sometimes people say, if prices are moving up, you don't want to be in a stable versus set asset pool. Now, there could be a way to sell out of your asset because, in this example where this person's ending up, as we see on the screen, with a lot more stable coins and a lot less Hex, well, that might be a way of you selling into the top, for example. Maybe you think the bull run's coming to an end, so now you're ending up with stables, right? And then you close the pool, and you've sold your Hex into stables while also earning some fees as well. So there's definitely, game theory here on how to play it. And like I said earlier, PulseChain is inexpensive enough and simple enough where you can start to learn with just even small bags. Like, you could do $20 each side and start to learn, like, how's this working? What's up, IO? Made an announcement. They got a new LP system coming out without any permanent loss. Okay, well, we'll have to see what that is. Like I said, I don't consider it permanent loss. I think part of the game theory is this balancing that's constantly happening and how you manage that, right? Otherwise, you just have two systems of some kind of, single-sided staking. Like, it's not really, like, why this works is because there is this imbalancing and the fact that you are taking that risk to provide it. So let's see what they're up to. I don't know yet over there. Brenton, you probably got more Pulse because Pulse X is up 3x from the low. Yeah, I think I did end up with more Pulse, but it was fine because I think I had a ton of Pulse X anyway, and I earned because I earned so much ink during that time that I think it worked out where I was happy with it. So there's you do want to be careful, but it ended up working out for me, at least for how I'm playing my hand, where I was fine with it, but I was surprised at times where how much imbalance happened. But luckily for me, I was happy with it because I earned so much ink at the time because they were giving a lot of ink out. So I was like, okay, maybe this is going to work out. So let's see, right? Like, obviously, if ink doesn't do much, then it's not going to work out well for me. But I think ink could run pretty hard, so maybe it worked out. Could you please look at Dogecoin? We're going to continue.
And that's increasing
on this
in value, and accumulating the token that's staying the same in value, or really in this case, decreasing in value relative to the other token. And so here are two graphs that I really like to show when talking about impermanent loss, especially in the context of V2 versus V3 style liquidity. These graphs are taken directly from the Uniswap V3 white paper, and let's just focus. Let's just focus on this one on the right quickly. This one right here. So each of these bars represent a different type of liquidity position. This yellow one represents a Uniswap V2 position, and then the other three represent a V3 position. So if you remember, V2 is a liquidity position from 0 to infinity. Now, the x-axis is the relative price change between the two tokens, and the x-axis is the relative change between the two tokens, so the change in price, and the y-axis is your impermanent loss. So minus 0.2% is you had a 20% impermanent loss. You had 20% less value than if you would have held your tokens. And so you'll notice, just looking at this V2 position, it's a fairly gradual slope down in both directions, whether each token is going up or down in price relative to each other. And it isn't until we get 10 to the third, or basically 1000x price change, where we start to see like a 90% impermanent loss. A 10x price change is about a 40% impermanent loss on both sides. Now, what you'll notice is with these positions, they're getting smaller and smaller, and this slope is increasing as the alpha is decreasing. And what the alpha is for these three lines right here for the V3 position, that represents the wideness of your V3 position. So the wider it is, the greater the alpha. The narrower it is, the lower the alpha. And so you can think of it like a price range between, let's say this alpha of 20 is a price range between plus minus 2x the price, and then the alpha of 4 is like plus minus 50%, and the 1.1 is like plus minus 10% of the current price. And so what you'll notice is as you narrow your bands in a V3 position, your impermanent loss greatly increases, or the rate of impermanent loss greatly increases. So let's take this purple line, and each of these positions not yellow represent a single position on V3. And so if we're notice at this 10x price change, your V2 position had about 40% impermanent loss. Your widest V3 position had about 50%. The middle narrowest had about 70%. And your narrowest one had 80% impermanent loss. So what this graph is showing is as you narrow your bands for your V3 position, you experience impermanent loss much, much quicker. And this makes sense if you think about it, because your liquidity is concentrated within a tight range. So the more the price moves within your range, the more of your tokens are being swapped with, which means you are losing the token that is increasing in value at a faster rate the narrower your LP bands are. So if you have all your liquidity within a really, really tight range and prices moving through your liquidity bands, you're swapping your tokens really, really fast. People are using your tokens to trade much faster than on a V2 style liquidity position. And so this gets at a really, really important concept. The tighter your bands are, the more impermanent loss you're going to experience. I guess a better way of saying that is the faster you're going to experience impermanent loss with the price movement. Now, this other graph is showing something similar, but what it's showing is on the x-axis, we have time and days, and on the y-axis, we have the relative change in price. And so this is a projection of potential price actions that could be experienced with this given pair. And then that's what all these purple squiggly lines are. This black band, what it represents is the ideal liquidity range to have to capture the most amount of price action over time. Now, what you'll notice is that these bands are slowly increasing over time. And what that is telling us is that ideally, if you want to capture the most price action, if you want your LP position to be in the money for the most amount of time, it would actually be increasing in range over time as the volatility is increasing, or as there are more potential price actions. And all that means is that, like, there's a potential that price really, really skyrockets up. There's a potential that price skyrockets down. There's a chance that it trades where it's at. And over time, the probability of each of these extremes occurring increases. And so you want your liquidity to be increasing in ranges over time. Now, let's just say we have a liquidity position that's really, really tight. These red bars right here are your liquidity position. And, for an LP position, a single one, you can't have it increase like those black lines over time. It's static in a straight line. And so if we had our position right here, all of this potential price action that's happening within these bands, you would be in the money for. But any of those potential price actions that go outside of those red bands, you're experiencing 100% impermanent loss. And what that means is you have completely traded out of one of the tokens and you're left completely with the other. So let's just say this is our Hex USDC example. When price is going up, that means the Hex is going up and you're losing that token. So if the price is going higher, that means you're left with 100% USDC. So anytime the price goes above this red line, you're left 100% with USDC and 0 Hex. That's 100% impermanent loss. Now, if it goes down, you're left with 100% Hex and 0 USDC. That's another 100% impermanent loss. Now, if you'll notice, if we increase these bands a little bit wider, say we go down this line and we provide liquidity at this range right here, around time day 5 is what it would be on this graph. You'll notice that there are more potential price actions that our liquidity bands connect with, or our liquidity bands are in the money for. And so we are making fees for a longer period of time in this example, although the amount of fees that we're earning per trade is decreased because our bands have increased. But you'll also notice that the potential for experiencing 100% impermanent loss has decreased because we've captured more potential price actions. So now that we've captured more potential price actions, our chances of impermanent loss in the 100% direction in either way has decreased. And that's what this is showing here. So both of these graphs are showing about the same thing. They're showing it in different ways. And the TLDR, the big picture message that I want you to take away from this for a V3 style liquidity is that the tighter bands that you have, the higher percentage of your coins are being traded with, which means you're taking more bad side trades, which means you're experiencing more potential loss. Of course, the flip side to this is that you're earning more fees at the same time. So your APRs are higher and you may be outweighing that impermanent loss in the first place. Now, in this example, I've kind of talked about, 100, you could end up with 100% hex or 100% USDC. And so for those of you that are kind of experienced with liquidity providing already, you might already recognize that impermanent loss can work in your favor if you're trying to buy or sell your tokens. That's something we may get into a little bit later. But that is everything for this lesson on impermanent loss. Guys, don't be scared about impermanent loss. Just keep in mind that it is a risk that you're taking when you're providing liquidity. And so, the take-home message for this is that the wider your liquidity is, the less impermanent loss you're going to be experiencing. The tighter your bands are in a V3 position, the more impermanent loss you're going to be experiencing. Now, the tighter it is, because you're taking on more risk, you're earning more fees. And the wider it is, that you're taking on less risk, so you're earning less fees. But keep these in mind when you're providing liquidity, and always keep in mind in the back of your head, like, hey, like what kind of impermanent loss might I be experiencing? Or even model out that scenario. It's like, hey, if price goes this high, how much impermanent loss would I have? If price goes this low, how much impermanent loss would I have? And like, what tokens would I be left with? And am I okay with that? And so this is a really, really crucial concept for you to understand when providing liquidity. So make sure to rewatch this video to understand. And if you have any questions on it, make sure to ask me on Twitter or wherever you might be able to find me, or even ask in the comment section below. That's everything for this lesson. I hope you enjoyed it. I hope it was clear and concise. And in the next video, we're going to be talking about some different data that is useful to be able to read. So like there's different types of data in terms of choosing a pool to provide liquidity in, on whether it's a good pool, a bad pool, ones that we earn a lot of fees in, ones that maybe we won't earn a lot of fees in, and just also doing analysis via liquidity providing. Or I guess a better way of saying that is, how do we do analysis on the data that we have based on what the current liquidity is? So yeah, that's today's
CryptoSloth. Thank you, man. That was really cool. I can't wait for the next lesson, actually. So the next time we're going to go in deep. Hopefully this week we're going to start on lesson 4. I think there's 9 lessons. So we'll start at lesson 4. We'll at least do the next 3, and then we'll have like 3 more left. Well, 4 more left. How many's got 10? Yeah, we'll do a few of these. So I can't wait for the next one. I hope you guys understood that. So definitely right now, smash like on this video if you got some alpha, and go to CryptoSloth and also give him a like over there and subscribe to his channel. Very smart gentleman doing a lot of really cool work. Brenton said, I agree, saying your ink would offset your position. I agree too, man. And Pulse MP, can someone explain why I want ink if it's a reward token? My brother, let me tell you really quick in 2 seconds. BTC was also a reward token for supporting the network, technically, for holding up by the hash rate, by holding up the network. You were just rewarded this BTC. People were dumping it for pizzas back then. They thought the same thing. Well, it's just a reward token. Let's just dump it. It's now worth over $100,000. So, you got to make your own decisions. But my channel, there's a lot of videos about incentive token, and there's certainly a lot of other videos out there in general. Body mechanic, when you getting that vacant blonde chick on again? I think that your question just summed up the reason why she probably won't come back. I don't think she was happy at all. She read the comments. I did too. I think a lot of you guys were dicks, all right? And why would she come back? That was the weirdest thing I've ever seen, by the way. She was super cool, and she wanted to learn, and some of you guys were, I'm not even going to say it. I had to delete like 3 or 4 comments, and she saw them all, man. She's not dumb. She was nervous because she doesn't know all the crypto stuff, but she was so sweet, man. But she's really smart. She's way smarter than she was letting on to be, and she saw everything you guys said, and she could tell I was trying to like protect her, and I deleted a bunch of shit, but she saw everything, man, and she wasn't going to come back after that. And that was weird, man. I didn't understand why you guys, like, there was a girl wanting to learn crypto. Yeah, she was hot, but like, why not just be like, cool? Like, instead now it's like, why isn't she coming back? It's like, I wonder why she's not coming back, That's why I don't bring girls around you guys. Or like, I could have girls over here on the show, but now I'm nervous. Like, how are you guys going to behave, right? That's probably why a lot of you guys are having trouble having threesomes with your girlfriends, because your girlfriends are literally like, I'm nervous to bring my friends around this guy. But it's true, man. You guys have to know how to talk to women, man. But she wasn't vacant, man, at all. She was actually a really smart girl, and she was very hot. This is very beautiful. We'll do Doge tomorrow. If you want charting question, put it in a super chat. Let's go down here. Solid X is a good leverage play in ink. Yeah, he's got a lot of ink. Could be. If volatility is low between the pair, you could set a smaller price range band with less risk. Yes. If volatility is low between the pair, you could set a smaller price range band with less risk. Yeah, exactly. I never said a word myself, but dude, no, you didn't. You were actually cool at the time. But you know, you do remember though, a lot of guys said some really offensive shit, man. You remember that, right? Like I could see her kind of like she was being really cool, but she saw the comments, and I was deleting them as fast as I could because some guys said some really fucked up shit. You remember that, right? Some guys really said some offensive stuff, and yeah, like I mean, I couldn't take it. I deleted it, but she saw him, right? So she was cool, and then she bailed, and I didn't expect she was gonna come back. If people had just been cool and understood that she wanted to learn, like I didn't understand why some of the guys were saying some of the stuff they were. You remember that, Ash? Yeah, there were some really nasty comments, and like, you know, that's why I'm also nervous about inviting other hot girls on the show. Like, I know a lot of girls that would come, but I'm like, how do I bring beautiful women around crypto bros? Like, when you guys act like that, it's really weird. I remember, I've had a lot of really cool girlfriends, and they've always been like, "Oh, you're really fun." And I've had so many times where I've had to tell girls like, "Don't bring your friends over tonight." And then I talk to other guy friends, and they're like, "Oh, how do you have a threesome?" It's like, you don't, bro. When you're just a cool guy, like, girls love fun, and when hot girls like being with their other hot girls when they're in like a good feeling place. And if you're just easygoing and cool, like, they'll just naturally come around. But if you're not cool, girls aren't going to come around, and they're not going to bring their girlfriends around you. And then I understand that perspective too, because I'm like, damn, after that, because, you know, I think we deleted 4 comments, and even Ash has said, like, they were nasty fucking comments. They were not cool, and she saw them, man. She saw them, and I'm even the place where I'm like, I can't bring girls around on the show. That's crazy. We are scaring away hotties. We can't be doing it. RC gets it. It's like, why would you say that to, like, you know, why wouldn't you guys want to respect women? Yeah, Tam Tam gets it, man. Tam Tam, did you see that girl? She wanted to learn crypto. She was really curious. She actually was. And I was here and I saw tons of hungry simps in your chat. Next time, ban those people. I think I did ban a couple of people because it was uncalled for. It was really not cool, man. It was really not cool. And she was so polite and cool, but she didn't even come into the chat in the Telegram. And I was like, oh, she ain't coming back. She was offended, like, but she was a very smart girl, really bright. She just didn't get all this tech. I wasn't reading comments, but I rarely do. Oh yeah, body mechanic. I wish I had photographed some of those comments. I didn't want to make a big thing about it. I just kind of learned my lesson. Like, I can't bring girls around you guys. And that's a sad place to be, where I know hot women, and I can't bring them around you guys. That's crazy. If you go back to the Crypto Princess video, Bit Finesse, she came on one episode by accident. Like, 2 girls showed up. It was her, and then Crypto Princess randomly was like, "Oh, I'm available," and she just jumped on too. So we had one episode, and both girls were there. Now, Crypto Princess, you know, is more a tech type girl, so she understood it. The other girl wanted to learn. She was more like a social media girl, and damn, dude, there was some brutal, really disrespectful comments. I think 2 guys got banned immediately. I think I banned everybody actually immediately because they were really offensive, like really offensive comments. It's okay even if some guys were simps, but it was the nasty, like, just really fucking offensive comments that night, man. It was shameful. Yeah, it really was, because it reflects poor on me too. It was like, what kind of guys are these? I didn't even know the guys that did that. It wasn't even the guys that I know necessarily. It was just out of the blue. It was like the one time people wanted to chime in. It was just like, what the fuck? Can you see her slight embarrassment? Yeah, Ash, you nailed it. She was, and I could see it in her eyes because I'm tuned in to to that kind of stuff with girls, and I just deleted them as fast. But I know she saw it, and no, she went to XRP. She did. She probably. I guarantee you, she probably. If I go look, she went over to Solana or XRP. Like what some of the guys did, and I know it's not you guys who are here right now, but was so awful. And maybe I should have. I didn't see it coming either. I thought, okay, maybe we got one, but then they kept coming. I'm like, why would you guys say that? Like, don't you want beautiful women to come hang out on stream and like talk about, like, at least try to learn tech? Like, I would think they're curious. I also, and it's also disrespectful to me because I also do the work, right? Like, you know, in terms of like, you know, talking to girls is a different thing. You know that, right? Like it's counterintuitive. There's like, you know, I got to turn up the riz a little bit, right? And I put in the work. Like, because she didn't just show up randomly. Like I'd been talking to her for like a week or two. I was like, look, you should come on the show, blah, blah, blah. We'd exchanged some things. So I'm also putting in effort too, right? And then you guys did that. And, you know, I didn't say anything afterwards, but it was massively disrespectful, man. And it was disrespectful to her big time. She was really beautiful and really sweet. I talked to her so many times before the show. You guys have no idea. She was an absolute sweetheart and really cool. And I'm not even getting into it more. Make me mod. I'll hammer those guys. And yeah, you know what's crazy? Deerslayer wasn't available that day, just randomly. And I had 2 girls show up that one show, and I had no mods that day. So we might need more mods because maybe you guys could have been fast enough to ban it. But I think, you know, she's a smart girl. She saw it rolling in the chats. We could have maybe put a delay on it. And I don't know if you could do that where the mods see the comments first. Like maybe there's like a 30-second delay. And that way, if we have girls on the show and because they weren't just being mean. I mean, they said some offensive shit, really offensive shit. It was a great stream. KD, you saw those comments? Yeah. I wish I had photographed them. I would have shown you guys. Must have tuned in once she had tuned out. Love and light. And then she started tuning out because I could tell that the comments got to her head. Like she started thinking like, oh, do they just think I'm a hoe? Like do they think I'm an idiot? And she was not an idiot, man. Girls are really, like, especially sweet girls, are good at like kind of just playing up being feminine. They, you know, they get that. Sometimes not all guys are comfortable when girls show how smart they are, but she was a very smart girl. Yeah, comments were almost like they never seen women in their life. 100%, man. No, it was like these guys were like basement dwelling, looking at porn. I don't know, man. They were weird. I couldn't even be that offensive. It was so weird. I didn't see, but I think it's awesome. We should want more women, the merrier. Yeah, like confused me out of my mind. I'm like, the girl was drop dead gorgeous. Like, why would you do that? Crypto Princess pulled her claws out that night. Haha. How we treat people matters. Yeah, I think she did say something too, right? She kind of chimed in. This is so disappointing to hear, but not surprising. pdai chats is boys club too. Make ego central. I've been saying since late 23, women will be a strong meta in crypto. Mark my words. Yeah. Mod me, bro. Bitfinesse, come to the Telegram if you're really interested and start hanging out so we can get to know you if you're serious, because I might invite more girls again, but that definitely taught me a big lesson about that. Yeah. I even got girls in real life that would come join the stream, but now I don't know what to expect from you guys. Not you guys, but you know what I mean? From the chat, right? But yeah, if you want to mod, come to the Telegram, hang out. Let's get to know you. And then we can figure out if there is some kind of delay. So if we do have ladies on there, like I know some randoms are going to say some dumb shit, but as long as the girls don't see it, because it was crazy in real time. I was watching her check out because I was like, oh, sorry about that. I deleted them, but I could see in her eyes. Because, you know, she started thinking about the comments like, oh, do they think this about me? But it was not cool. Girls play dumb. They do. It's an assassin move. Most of them do. Yeah, but he gets ladies. Yeah, it's not that they play dumb. They don't want to show always. Yeah, it's just that's what femininity is. That's what we like. Like the girls I date, they're feminine. They're not dumb. You might see them in their heels and their dress and think, who knows what you think, but they're, you know, I date really smart fucking girls, but they're feminine, and femininity has a way of like hiding, you know, it's feminine, but you got to know how to read that. It was probably just a minority wolf, but sadly, Exactly. Yeah, it was like 4 comments. I know it wasn't most of you guys, but it was enough to just ruin the vibe with her especially, right? And like, yeah, why and why should she take that shit? I'm surprised she hung out that long and didn't go, okay, I'm gonna go. You know, I wouldn't take that shit. I wonder where the rude commenters were from. Maybe they were around same region, some nations. I have no respect for women. Sad. Michael, I don't know. I couldn't tell from the names or anything like that. I'm in your Telegram too. I can send you my username there. Askas. Okay, cool. What's the TG? It's at the top of the screen. It's also in the description at Same Wolf Vision. Let's see if there's anything worth looking at right now. Yeah, everything's just going sideways. Nothing's going on. There was something I was supposed to mention to you guys. Oh, here we go. Okay. Really quick. Wait. Where are we at? What screen are you guys on? All right. So KR just posted this. This is true. This is a funny irony. Netanyahu nominates Trump for the Nobel Peace Prize. Trump, we're going to have to send more weapons. You can't write this stuff, guys. You really can't write this stuff. And then I'm not even going to get into the whole Epstein stuff right now at all. But I think you guys know. Something else very cool. This guy is wrapping his car in, what is this, ink token? No, PulseChain colors, everything. Let's see what it looks like. Was that a Challenger? Yeah. Whoa. Oh, come on. You could have done a wide shot. Look at this. Who's filming this? Fucking clowns. I want to see the wide. All right. Well, it looks pretty cool. Nice. Good job. TG's at Same Wolf Vision. Guys, Telegram groups. We have 3 of them at Same Wolf Vision, Wolf's Pub, and Passport Pub. They're all at the top of the screen up there. They're also in the description. Jeff Bezos just sells $665 million worth of Amazon shares. Is that true? He did sell shares this week, but it's part of a pre-planned $10 billion sale he set up months ago. Nothing shadier is going to do him. He's been unloading billions to fund rockets and yachts. Yeah, but he wouldn't do it right now if he thought it was really going to rocket ship up. So we're probably approaching. We're getting into top-ish range right now, or at least maybe there's going to be a pullback. That is a lot to unload right now. But he does have a lot, so maybe it's nothing. Maybe that's nothing for him, right? Part of a plan. It is he sold 666 million worth of shares. Wow. Interesting. He's got a really good plastic surgeon. Fixed his eyes and everything. It's true, I bought him. Bezos making his pile look like nothing. Damn. Yeah, I guess he's getting older too. It's about time he's going to start selling. Let's see. All right, guys. Another thing really quick. There's even more flooding. Apparently, flash flood also happened in New Mexico. Is it? New Mexico, Rodino? So if you know anybody there, it looks even worse in Texas. I don't know. Texas is in trouble too, man. Jesus. Apparently the water level rose 20 feet in 30 minutes. 20 feet in 30 minutes. Is that what I read? That's a lot of water. Oh, jeez. And then Texas, too. So everybody send a prayer out tonight. on your bedside. This is crazy, man. Crazy. Jesus. What do you think? Is this weather manipulation or is this summer rains for that area? Because I guess Texas, New Mexico. Jesus. That's crazy. Okay. This is how fast it happens. Jeez. That is nuts. And you know, a lot of innocent people, a lot of young people got hurt in Texas. Not hurt, but they got, you know, unalived. So yeah, maybe is it these cloud seeding projects, right?
Into the storm and send microscopic particles into the cloud. Particles that act like magnets for
It's really
water
sad,
droplets,
man. It's really
bonding
sad.
together until they are heavy enough to fall to the ground as rain or snow. At the University of Colorado, researchers are working on artificial intelligence to deploy cloud seeding drones.
And it's not just cloud seeding from the sky. There are hundreds of those things. That shack you see in the foreground is a ground-based cloud seeder. The little flame coming out is sending tiny silver iodide particles up into the sky. When a storm comes through, they go up to 2,000 feet above our head, into the storm, up those mountains, and make more snow than it naturally would.
While cloud seeding has been helping get every last drop out of some of the driest years on record, this past winter, Mother Nature came through. The Southern Rockies, which feed the Colorado River, got more than 4 times their average snow. But experts say it's still not enough.
As much as cloud seeding is a boost or a help, it's not a solution. The main solution is
conservation.
Cloud seeding is...
Yeah. Yeah. So, yeah, man, everybody sent some prayers out. It's really sad. So many, the Caryville storms just sad there. Yeah, it's really heartbreaking. Really, really heartbreaking stuff, man. So this is that video. You guys can go. It's called With Crypto Princess is bottom in. We were with Anna Nicole, and then Crypto Princess showed up as well. And we had both girls on. And you guys, I don't know if you can even... I don't know if any of the comments show up. You guys can go look. Maybe you can still catch them. Oh, no, I deleted them all. Yeah, they're all gone. Man, it was really not cool. You know, I didn't get to talk about it afterwards. We were making a lot of videos. There are a lot of women out there that are curious about crypto, and the behavior was unbelievable, man. You know, and like I said, it was just a minority, but it was a lot. It was a lot of dudes putting super offensive comments. Both girls were absolutely gorgeous. Anna Lynn was curious about learning about crypto and PulseChain. I guarantee you she ain't ever coming back. She's going to Solana or XRP probably. It was embarrassing. It was embarrassing for me. It was embarrassing for her. It was embarrassing for everybody. Like, y'all said the most offensive shit I've ever seen in my life. And then Crypto Princess came. I think she might have said something about it. She's a really smart girl. And you could see her eyes right there even. She's already tuning out. She's already like, what kind of humans are these? You can just see it in her eyes. And then she was like, okay, I got to go. And she left. And yeah, man, it was so fucked up. And she was trying to learn. She was curious about stuff. I'd been talking to her for like 2 weeks to get her to come on the show. And she randomly, I didn't know she was going to come on this show, by the way. The show for me was just scheduled with Crypto Princess this day. And then Anna literally is like, hey, Say Wolf, can I come by? I have some time tonight. I'm like, yeah, just come by. And she came, and she was super cool. And then, man, the dudes just fucking, some of you guys in the chat, it was like, man, geez, I don't know where you guys grow up or like what's going on. Some like the most offensive stuff I've ever seen. I think I should have apologized to her more after and sent her a letter. But the fact that I even got put in that position where now I have to like send apology letters and shit, it's fucking ridiculous. But it was still a good stream. It was back here 3 months ago. And Just now, I think Shannon came. There was a girl, Shannon. She was in the green room, so I talked to her, but she was at work, so she had to go. She was going to join it. So maybe girls will start coming back again. You guys have to, you guys have to behave. Learn what the other species is. They are women, yes. Most European Armenian girls I date want to learn about crypto too. I onboarded a few to post. Cool. Oh, right on, brother. Right on. My stream's good. Yeah, I was there that day. The comment section was weird as fuck. Shishio, yeah, you remember that, right? It was sad, man. It was a sad day for me to say I'm part of this community. Like, it was so embarrassing. I could not believe the thing some of you guys said to that girl. And she was so fucking sweet. She was so cool, man. She never was, I don't even understand why some of you guys would say the things you said. Shocking. You could do a pre-record. Yeah, maybe Ash, maybe that was the thing. Maybe I should have done something like that. I didn't expect, I thought some guys would act simpy, which is fine. Like, I was like, oh, okay, some guys are going to say some dumb shit like, oh, she's hot, da-da-da-da. But some guys said some fucking unbelievably offensive stuff to the point where she was hurt, man. It was wrong, And not only that, but we're talking about PulseChain. She shows up. She looks absolutely gorgeous. Why would you offend her? It made it didn't even make sense to me. And then I understood. I'm like, oh, that's why most guys, never experience the kind of life that I have. Like, yeah, I'm embarrassed to be a male. It's ridiculous. But it's a good stream. I was way back 3 months ago. You guys check it out. I was actually really off that night too, which was weird because the market was crashing. Like PulseChain always went through these moments, and right then when she came on, we started to get like red candles, and I think PulseChain was crashing hard right there. So I was like really nervous and almost like I was like, oh fuck! Like the one stream, like everyone's showing up, and like right now, I don't remember what else was going on. There was something else. Maybe pdai was crashing. I was like, it was a very stressful stream. It was really stressful. So yeah, everything was crashing, and I was trying to play it cool and pretend like I wasn't affected by all the red candles. It was a very funny stream in that sense. What the fuck? You well early, bro? What? See, the guys were acting weird. Some of you guys just can't even be around women. You literally cannot handle being in the presence of other women that will talk back to you or something. Oh, look at this guy. There you go. This comment. Oh, Anna's real. Like, what? Why? What does that mean? And this is not even one I deleted. I had to delete so many, and I got exhausted because the market was crashing. I'm talking to this beautiful woman, and there was no mods that night, so I'm literally having to fucking delete it. And she's seeing the comments and looking at me, and I'm like, oh fuck. So I'm spending half my time trying to go through all the comments, delete the offensive ones, and what do you mean, Anna's like? It's just a girl wants to learn about crypto. Some people were cool. They were like, hey, we can actually see some of the comments here. Tam was there that day. She probably remembers what was going on. Name and making obtuse. Yeah, we should have taken names. In hindsight, I was just overwhelmed. I didn't expect it, but we should have been taking names. We should have 100% been taking. She was not mean. She was not like American Girl. She didn't talk over or yell. She was super cool, super feminine, super sweet. Like, I was shocked at you guys. We should have 100% taken it. She's adorable, man. This guy was sweet. Yeah, this is what I expected. I expected some of you guys would just be a little, like, I haven't seen a girl in a long time kind of thing. But man, some people just lost it, dude. Yeah, this is what was happening on PulseChain. We were crashing. So I was really overwhelmed. I had to delete all these comments. We had no mods. PulseChain's crashing. You guys were attacking Anna. I was just like, I was completely overwhelmed, man. Everything. Here's Pulse. Yeah, remember Pulse was crashing. I had these two gorgeous women on the show. Pulse is crashing. I had all these perverts in the chat. Man, I'll never forget that. It was super traumatic for me. I better not recognize the names. Yeah, maybe we'll go through, but I deleted all the really bad ones. I wish there was a way I kept a record. You guys let me know. Is there a record? Oh, there's a mechanic. Shots fired. Pew pew. Let's see what he's saying. X is going to fly. Look at this guy. What is going on here, sirs? What? Oh, man. This is the bottom, Charles Fox. Yeah, we were crashing hard. Look at all our charts. So I was at stress level 100. I was like, oh man. And so, okay, so here's the thing. So Anna comes on the show. Think about this too. She literally comes on. She's like, oh, this is PulseChain. Everything's going red. Everything's crashing. And half the chat is just perverts. And that's her impression of PulseChain. I was like, fuck. Man, that was amazing. Yeah, she definitely went to Solana or XRP after that. And lessons learned, lessons learned. All right, guys. That was a cool show with the LP. Tomorrow I'm going to try to come back, and we'll do more LP, and we'll see what the market does. We'll go into some charts as well. But right now, everything's just hanging out, waiting for the stuff that's happening this week. Which I think the tariffs go into effect. They went into effect today, right? Or is it tomorrow? We're gonna probably get a little pullback. We'll see. We'll see what's gonna happen. We don't know. Let's see. Thanks, Saint. Trailer Park Boys. It's a blood. Oh, right. We got the moon thing to contend with. Yeah. You saw those charts we were dealing with. So I had my, So we need more mods too. So definitely come to the chat if you guys are interested. I don't want something like that to happen again. I was really overwhelmed that day. Really overwhelmed. Yeah, everything was red. Perverts in the chat. It was nuts, man. It was nuts. And then if chat can build its reputation back, we'll bring more girls back on the show. But you guys got to show me you can handle it. And you guys are awesome, though. Any questions, too? Shoot them over to Sloth and, go like his videos, subscribe to his channel, and we'll continue later. All right, everybody. Have a good night. See you.